So I said that because the next slide starts talking about 11 to 24. $50,000, contribute 50%, you'll be eligible for a sliding scale of that tax credit. Here it is. Works on a sliding scale. Each FTE above 10, and average wages $25,000. Above the $25,000, then that credit is reduced. Questions?
How are they linking companies? The company that I work for has 2 other companies. They all have separate federal ID numbers. They all have separate payrolls, but they all have the same owners.
So, as an owner of a business, if I have multiple businesses, then guess what? It's my total number of employees.
Even with different federal tax
Yes.
ID numbers?
Yes. I'm the owner. These are my businesses. So I have a lawn care business, I've got a hospitality business, and I've got an ice cream business. And I'm the owner of those 3 companies, so my numbers add up of all those employees. So now it's, are you over 50 employees? Yes. Do you offer health care insurance to at least 95% of the full-time employees of your 3 companies? Yes, sir.
What if your ownership's different? Maybe you're part owner of this company, part owner of that company, but it's not the same ownership.
There will be a calculation depending on your level of ownership. 10% ownership, 20% ownership, 50% ownership. Because the other owner will also carry that responsibility. Yes, ma'am.
What if you're seasonal and you only have over 50 through?
I'm going to talk about seasonal.
Okay.
Okay? Another parking lot. Okay? We're going to have a full parking lot, aren't we? Okay, so basically, 2010 to 2013, as I explained earlier, you're eligible for 35% tax credit on your premiums. You can still deduct that through the remainder of this year. Starting in 2014, that credit goes up to $50,000 only if you purchase insurance through the marketplaces or the shop. Okay? Credit can be taken for 2 consecutive years. So I did speak about that. Now, this is a federal credit. Now, a lot of states are also offering a credit. Right now, the state of Ohio has not told us what exactly they're going to do with the federal monies that they have received for the Affordable Care Act. Yes,
I have
sir.
a question on that. Starting in 2014, our health insurance renews in November of 2013.
Okay, so here's, I can't give advice, okay? However, I've been in other presentations where that question had come up, and the suggestion was, go ahead and renew your insurance. Give this a year to work out.
Then
for the
you lose your credit then for that?
you wouldn't get that credit. Well, you wouldn't get the credit from the shop. Okay, so
Yeah, but right now we're taking the healthcare credit, existing healthcare credit, so we have no healthcare credit then for 2014 as well.
that's correct, because in 2014 it goes up to 50% for those businesses that purchase out of the pool. Because remember that they're trying to drive you to the pool of affordable health care so that you're in, he's in, she's in, and everyone's in so that they can spread the risk and have the premiums lower.
So we should drop insurance then for 2 months for our employees.
I'm not going to.
That seems weird.
That's a business decision.
Yeah.
That's a business decision. But however, I've heard some suggest, well, no, you won't have to do that because actually the open enrollment will be October 1st, 2014. So, but I've heard some suggest that they will just keep their existing insurance. They let the
Oh, so you can the pools open up October 1st, not January.
the enrollment opens
Oh.
just like your enrollment is opening in November, right? So they usually have from November to like January 1st or so to change. After January 1st, that's where the coverage starts, and they have a certain amount of time to. So you can enroll in the shop if that's what you choose to do once you see the plans and you can compare to your current plan versus what's being offered. And if that's the case, your people are already covered all the way through the end of the year. It's just that this is now the open period, and then you can switch insurances. It is estimated that some 80 million people will end up switching to insurance coverages that are in the exchange, and 30 million new clients will purchase out of the exchange, which in the end means that it has to be competitive if the insurance companies want to continue your business. I don't know who you have insurance with now, but they are probably making an offer into the exchange. I mean, we only have like, what, 5 major carriers, really. Yes, sir.
Will the exchanges be required to have reserves? Insurance companies are required to have reserves?
Yes, that's all the penalties and these fees and the individual fees that are going on, and then there are some fees that the insurance companies have to pay, is going to create some $30 billion fund reserve to help support the exchanges, but also still cover those individuals that do not have health care insurance, but they're going to end up paying, you know, because there's going to be a penalty to them when they file their taxes. So yes, there's a pool of funds, and the insurance industry is carrying the brunt of that.
Hey, if we were to put our employees on these exchanges, one, I assume the employer is allowed to pay part of the premium. It doesn't all have to 100% come out of the employee's pocket?
No.
Okay.
No. 50%. You're going to have choices. You're going to have choices of plans where you can decide whether you want to contribute 50%, 70%, 80%, or 90%. And there's some metallic, you know.
Are they all going to be high deductible plans?
No, they can't be. No, I'm going to talk about that again.
Okay. And
you need to come stand up here with me.
the other thing is that will the employer still be allowed to offer an HRA or an HSA on the side to help offset the deductibles?
You can do whatever you want. Remember,
Okay.
you're under 50. Absolutely.
Okay.
If that's a benefit to your employees, absolutely.
Okay.
You can offer supplemental plans.
Okay.
Eventually, supplemental plans will be able to be purchased, including dental and vision, out of the exchange.
Okay.
Okay? So, states. So with the Affordable Care Act, there was a lot of money infused to the states to increase their coverage for Medicare and Medicaid, where right now you'd have to be at 100% of the poverty level. Now that it's raised up to 400% of the poverty level. So that means a family of 4 or something, $42,000, you know, they're at 400% of poverty. So they're eligible for Medicare and Medicaid. See, so it's covering other folk because it's expanding the Medicaid and Medicare coverage. Okay. So just kind of recapping, you know, if your business employs less than 25, employees average are less than 50, and you pay at least 50, excuse me, less than 50,000, and your business pays at least 50% of those premiums, you can get up to 35% tax credit for this year, 50% in 2014, if you participate in the shop. Okay. All right, so those of you that are in the 25 to 49, I hope that you've got your coffee, because now we're going to talk about you. You are not eligible for the tax credits, okay? However, you can still purchase out of the, you'll be eligible to purchase out of the shop, but you will not be eligible for those tax credits. But the states might have credits that are available. Again, we're still waiting for the state to decide what they're going to do with the millions of dollars that the government has infused and how they're going to spend that. They've already decided they were not going to participate in the shops, which now makes you eligible to the federal shops, which probably may be better. I'm not really sure. All right. So really kind of talked about a lot of this. There will be some, however, keep in mind, especially those 25 to 49, there will be some enhanced tax credits coming up in the future. Now, how that's going to look, we don't know. I do know that in 2016, right now, companies with 50 or more will not be able to purchase out of the shop. However, those up to 100 by the year 2016 will be eligible to purchase out the shop. So basically, it's for you right now, populating and trying to continue to populate it so that they're working under a competitive situation versus the risk pool. Yes,
That brings up a whole new question.
you
So
are just full of them today. What's in your cup?
coffee. So if you are under 50 employees when you start shopping in this shop, but you go over the 50 employee mark
You were
before
still
that,
good.
you're still
fine.
good.
It
Okay.
doesn't-
Okay.
Once you go over it, which I was going to talk to those that were close. Once you start to participate in the shop, you can continue no matter how large you get. So
Okay.
you may be 48, you start participating in the shop, all of a sudden you get a boom and you have 200 employees, you can still shop out of the shop.
Okay.
Yes, ma'am.
Back on a screen or so, you talked about average annual wage.
Yes,
Would it be only the people who are participating in the insurance or everybody at work?
Yeah, everyone, your average wages
Average for
of your
everybody.
full-time employees,
And does that include management?
yeah, the employees.
Yeah,
Are you paying
okay.
them W-2, paying them with the W-2?
Okay.
Yes. Okay.
That means that includes
All right.
taxes.
Well, now I guess we can talk about what we've been talking about for the past 20 minutes anyway, which are the exchanges. So do I have any other questions to this point?
I'll keep my
Everything
mouth
kind of
shut.
clear as mud? Oh, a new question,
A new
yes.
question, yes. Just curious, how many states have opted out?
17.
And have they all reported?
What do you mean, have they reported?
I mean, that's 17 out of 50. It's not going to change.
They have the option at a later date to change their mind.
They do.
Each
Okay.
state will have their. So the states may be doing exactly what, when I was answering this gentleman's question, they may be trying to wait to see how this works to then decide whether they want to manage their own shop because there's more monies that they get to the state if they're managing their own shops. And then there's some other rules that kind of go into that. I'm not going to get like real deep into it, but
All right, thank you.
you're welcome. All right, so the insurance marketplaces. All right, SHOP, Small Business Health Options Program. Again, you will sometimes hear this called as marketplaces, sometimes you hear exchanges. This is the federal government, so just keep in mind.
Just the new slide.
No,
There's one additional slide.
Okay.
Okay.
So, oh, you broke my flow, I forgot.
Sorry. Shop. It's
Yes, you'll hear these names interchangeably. Keep in mind, this is federal government. Also, they're really good on acronyms and titles, but so you may get updates that it may be called, everything called the shop, everything called exchanges, or it may be shop exchange. And basically, it's just meaning where the businesses go and shop and where the individuals go and shop. Okay. Supposed to spur competition for the insurance companies for your business. Provide these essential benefits that are at the same level as other insurances are offering right now. Some states will use small group health products to benchmark, but this state is choosing not to. Basically, it's supposed to help you better predict your medical contribution and expenses. Again, it's supposed to pool those risks, reduce administration, with the electronic records reform. So it's supposed to reduce, the administrative complexity and basically some tax credits to lower the barriers for small businesses to be able to enter in and offer healthcare insurance. So that's the purpose of the marketplace. It also will offer you different choices of plans to choose from, which now, you may have just one option. At this point, you can go in and you can say, hey, company A, we're going to offer healthcare insurance, and this is the healthcare insurance that I want to offer to you. Because this is what I can afford, what I believe I can afford, and what I believe you can afford. This is what I would like to do. Or you may say, these 3 or 4. Or you may say, I'm willing to contribute to any of the insurances that are in the categories of me paying 60% or me paying 80% or 90%, that would be your option, and then your employees will be able to go in and shop for those particular insurances. Yes, ma'am.
Then you're saying that my employees, if I have 20 employees, all of them could have a different program?
And you would decide that. You would decide that. You would say, you would go into the exchange and say, okay, such and such insurance company, I contribute 60%, and it's called a gold plan. I know I messed up these metallics because I haven't got to, but they offer a gold plan, and their premiums are running around, and I'm just coming up with a number, so don't hold me to this because I see I'm being recorded, but just hypothetically, that their premiums are running, you know, $300 per month, and you decide that you want to pay $150, so the premiums are somewhere around, you know, $280, $325. Within that group, you may say, well, you know what, I want one of those that I know exactly what it is, or I choose in this group, this is where you can go and get those are your choices. So you have the choice of what you're offering. They have a choice of accepting your insurance or going in and purchasing it on their own.
Okay,
Does that make sense?
When you said they could go into a group.
Into the exchange.
Okay.
And purchase as an individual.
Okay.
Because I don't have insurance, my employer didn't offer me insurance where it wasn't affordable. Keep in mind, you don't have to offer. But I'm going to go in, I'm choosing not to go with the plan that my company is offering because I want to purchase it. I found one in here that, you know, well, if I pay 70%, I might get better benefits of coverage. I'm not sure what that decision matrix may be, but they'll have that choice, but you'll have the first choice of what you're offering. Okay. Yes, sir.
Since this is going to take effect the 1st of January, and since Ohio is elected to opt out, is there a website or something we can go to today to look at the federal shop?
Not yet, but I will give you some websites to go to because the shops are not open yet. The bids are going in, must be in by the end of this month.
Okay.
So once the bids are in, then, you know, the government will say yes, no, not affordable. Okay, these are the insurance policies that are in the shop, and then this is when I'm going to have to come back.
Do you know when that'll happen?
No, this is when I'll have to come back. No, this is why I'll have to come back. Because it's evolving. Okay? I had a question there.
Yeah, if you're already on pace to renew in October of this year, you said that you will have the opportunity to renew with what you're currently doing today or start the shop
exactly
in October.
October 1st.
But if you start the shop in October 1st, does it go into effect October 1st or January 1st?
Goes into effect January. So
that's
your
what he's saying, though.
Your insurance is if the insurance you have right now, it's renewable, you know, but yet they have that 90-day waiting period, you know, if they want to change insurance. If you want to change insurance, they're covered to the end of the year, correct? The end of the year is December 31st. January 1st is the coverage under the shop. I mean, they all work that way. The renewables are right around, or the open periods are right around October, November or so.
That's a huge open question because my response is no. At the end of September, we either get it in gear and renew, or you don't have insurance. So,
is that how yours is working?
Yeah.
Ours is February 1.
If the shop doesn't take effect, if the shop doesn't really take effect until January 1st, then we got October, November, December where you don't have coverage.
Okay, so that's the date. It may change. And obviously, you have a lot of different situations that are going on here. However, and I haven't gotten to that point yet, but the open season for the shop will be from October the 1st all the way through to like April, that you'll be able to actually go in and get the insurance. After that, then it will be October 1st every year. Will be renewal. So, you know, again, you may have to talk to a health benefits company. Do I have any of those here? So, thank you. You should be up here with me. So you may need to talk to a health benefits official, someone that can help advise you on your particular circumstance and how it would best fit you with this transition period. Would you agree, ma'am? So you're a semi-expert in the Affordable Care Act, aren't you?
I like that word semi.
Semi. Okay, well that's
every day.
That's the most important person in the room. I mean, because that's what's going on. She would have to be able to help you and guide you on what would be your best option, depending on what you have right now, depending on what's coming due. Yes, ma'am.
So what are we doing with employees then that would have insurance through their spouse?
They're covered.
Okay, but as an employer, we're not giving them a supplement, correct?
Well, you don't have to.
Okay.
So let's say you had to, if the individual decides to opt out of my insurance because they're covered under their spouse's insurance, I'm not going to be subjected to a penalty. They're not going to be subjected to a penalty because they are covered as an individual. Okay. So another hand, the same hand.
And what happens then when the spouses are kicked off of those plans?
Well, just like any other insurance, you know, it's going to stop, it's going to end. There is some coverage, good word to use, a 90-day gap coverage where the individual will not be subjected to any penalty because of this the transfer. But if they have COBRA, they're covered. If they have any other insurance, they're covered. So now, as you get to a point where that 90 days is coming up, and I'll tell you some of the exemptions at the end, you will be required to get insurance. However, if you're not working, if you know your income is less than 400% or so of poverty, you'll be eligible for Medicare or Medicaid from the state.
There's no enrollment period, I guess, if we have a contract that starts October 1st, say, within this plan. The employee then can, if they've had a life-changing event like that,
yeah, and
then enroll with whatever we offer as an employer?
They can, yes, if there is something, you know, and this is basic. So if they get married, you know, or they have a new child, you know, so those are things that can be done outside of the open enrollment period. It'll be the same here. So your first example was, you know, a hardship. In other words, I've lost my job, which means I've lost my coverage. There is some gap in there for about 90 days. However, depending on what's going on with you, you may fall under coverage of Medicaid, Medicare. That's why the government has infused so much money so that that eligibility is raised for situations just like that. Yes, ma'am.
Okay.
You have a question? No way.
I'm sorry.
No, you're okay.
So if the employees are in the shop and they have an option to choose different plans, will their cards come as a generic card from the shop, or will it come from like Medical Mutual, Anthem?
Oh, I have no idea how that, you know, what documentation will be delivered, but I mean, and this is an assumption again. But if it's United Mutual that you are purchasing that particular insurance from, that's your carrier.
Okay.
They'll be the ones that.
Well, I didn't know if it was going to be like, you know, the medical card thing where you get a certificate every month that says that you're covered on this, or.
No, you will be purchasing insurance just like you're purchasing now. I mean, it's who are you purchasing it from, where are you purchasing it from, and does that make you eligible for some sort of credit?
Okay.
Did I go through that? Premiums. You get one monthly bill, and you can make one payment through the shop. So there was a question asked earlier about your contribution. You know, you can make that contribution directly to the shop, and it will count for the premiums that you're paying, and also count for, you know, they'll only have to pay $100 less on your premium, but you may not be eligible for any credits because it might not be paying 50%. contributing 50%. But it is tax deductible. Okay, thank you. So, businesses with 50 or fewer employees, and in some states they may allow 100, will be able and eligible to purchase insurance out of the shop. In 2016, employers with up to 100 will be eligible to participate. So the shops will be gradually growing, and then that pool will start to increase, again, where that risk is spread amongst a lot of businesses versus an individual business, and soon it'll go up to almost 100. And once a business enrolls, it can stay and remain in the shop. So there was a question about that earlier. Okay? So when to enroll, October 1st, coverage for coverage beginning in January 2014, and then there, throughout the year, you can enroll on a monthly basis. But that is actually going to end on the open enrollment will end somewhere in April. Again, when I get more information and better slides, and I have meetings with Human Health Services, they'll give us more information on that. And you can enroll through a broker or directly through the shop at this website. And I do have that website listed again at the end of the presentation. This website is from the Department of Human Health Services. There are 3 government agencies that are involved. Department of Human Health Services, the IRS, and the Department of Labor. So those 3 entities are responsible for the monitoring and the control and so forth and so on of the exchanges. Okay. So this is a slide that I think that you do not have. So this kind of came up where we're talking about those incomes between 100% and 400% of the federal poverty level. A 3-person family with income between $19,000 and $76,000 for 2012 can enroll for coverage through the marketplace. Okay? So depending on where you fall in this scale, if you're on the other side of that, you'll probably be eligible for Medicaid, Medicare. Okay? And you are not offered or eligible for employee coverage, or eligible only for the coverage, and it's unaffordable, or it does not provide minimum value. And I'll kind of hit on that in just a second. And you are not eligible for coverage through any other government-sponsored program like Medicare. Okay? If that's the case, you will be able to purchase within the exchange. So I know that might be complicated, but these are the 3 areas for individuals to be able to purchase within the marketplace. Okay. All right. So here's the other side, the employer share responsibility. All of you are exempt. 96% of the firms have less than 50 employees, so they are exempt from the responsibilities of the Affordable Care Act to be penalized or demanded that you pay, offer health care insurance. You're exempt. Many of those firms that do not offer coverage, will be able to purchase within the shop, and it should be at lower costs. All right, a lot of verbiage. I don't want to read it to you, but basically this individual shared responsibility, I did talk a little bit about that. Those folks will have to, I don't know how this is going to look, but when they file their taxes, they will have to either prove or somehow or another talk about the health care coverage that they have. I don't know how that's going to look when you do your taxes. On your tax return, minimal essential coverage includes employers, COBRA, retiree coverage, coverage through the marketplace, Medicare, Medicaid, veterans, TRICARE. Any of these are considered minimum essential coverages currently. Sole proprietors, you will not be eligible to purchase through the shop, but you may purchase as an individual through the individual health marketplace. Does that make sense? Does everyone kind of understand? So if you're a sole proprietor, you don't have any employees, you will not be eligible to get a business tax credit, but you may be eligible for an individual tax credit when you go into the shop and purchase. Okay. So here's some incentives on why you should offer it. Those companies, which this doesn't pertain to you, but those companies that are required and that do not choose to offer health care insurance, there will be a stiff penalty. That penalty will range from like $2,000 per full-time employee minus the first 30. So some are opting that, well, I'm kind of close. If that person actually goes out and purchases in the marketplace, then I'm going to do my business calculation. It'd be cheaper for me to just pay the penalty and move on. However, keep in mind, the penalty is not tax deductible. The premiums are. All the premiums that you pay are tax deductible as business expense.
You said you only have to pay a penalty on if you have over 50 employees.
Yes.
It's only for full-time employees, so if you
Correct.
have only 30 full-time employees and 40 full-time equivalents or whatever.
It's only for the full time, and then so it would be exempt. I mean, there wouldn't be a penalty.
Okay.
Okay. However, if one of those individuals, now you have to stay for the next session because that's really what we're talking about there. But if you may be exempt from that penalty, however, you'll still have a shared responsibility if one of your individuals goes and purchases and gets a premium subsidy as an individual, then you may have to pay up to $3,000 towards their premiums. That's a part of that employer's shared responsibility. So, and then the calculation is whichever is greater, whether it's the penalty or whether it's the $3,000 for each individual that has gone out there and purchased. Okay. So, just some other things to keep in mind that we'll have to talk about later on. Some of these will pertain to you, some of them will not. The insurance companies will have to provide this month a summary of their benefits and coverages and the disclosure rules. The government is going to sift through that to make sure that everything that they're doing is legal. That medical loss ratio, remember when I talked about the 80% of premiums that that insurers must pay towards your benefit and only 20% towards administrative? If they do not meet that, then they are subject to have to pay a rebate to those that have paid premiums if they do not meet that criteria. W-2 reporting. So if you have more than 250 employees that you issue W-2s to, then you will be required to put on there, their wages, your contribution, and their contribution on their W-2. Now, that's only required if you issue 250. However, if you have more than 50 employees, I would check with my health benefits or my payroll and see if you can get that done, because actually what it does, it proves that you have offered health care insurance and that it's affordable, because IRS is going to see it right there. Okay? And the deductible contributions for flexible spending plans. Someone had a question about that. That is being lowered to $2,500. I think it was $5,000, and now it's being lowered down to $2,500. Basically, what was happening, people were losing money in that account because it's hard to predict, what your health care costs are going to be over the year. So, although it can only be used for health care coverages. So some of the things to look forward to. There'll be a 90-day maximum waiting period, for eligible employees. So when an employee comes in, and this is going to be more for those, well, actually, it will be you too, if you're offering insurance. 90 days after they are there, they must be covered. If you're offering a plan within 90 days of their employment, so that might be your probation period, the government is allowing you to not cover them for that amount of time, but within 90 days, they must be covered.
Do you have the option to cover them from day one?
Sure.
Okay.
Absolutely. I'll come work for you.
Well, we have some employees we do that with just to get the talent.
Can you say that so everyone can hear that?
I said that we have some employees that we do offer that option from day one just to get their talent.
And that's really what this is all about for those of you that have less than 50 employees, is to be able to attract, retain good talent, to continue to grow your business and to develop over a long period of time, like many of these other organizations have. And of course, the workforce now moves all over the place. And it's not like in the old days, you know, you get a good job, you stay there forever, and you retire. So now, you know, the small businesses have suffered for so many years being able to be competitive in this arena. So also starting in 2014, there'll be some additional incentives if you offer wellness programs. And how that's going to look, we're not sure yet. You can talk to the health benefits person back there, and I'm sure she'll be able to help you. But up to 50% credit, you know, for smoking cessation wellness programs.
I should plug the health department. We have a very successful smoking cessation program here. We've had a 54% success rate. So if you're interested, you can call us.
Yeah, they get any discounts if they're less than 50 employees?
Try. Actually, there's no cost at this point. If the participants can pay for nicotine replacement, we appreciate that. But yeah, it's a benefit.
And for employers with 50 or more, full-time employees or equivalent, there's some new reporting requirements for those coverages due on the 1st of January 2015. So again, you know, the next session, you know, that's who we're talking about, and we're not sure how that's going to look, but there will be some new requirements for them to report their coverages to the government. So the government's going to know, you know, is your insurance affordable and who is covered. And then there'll be new information, you know, for health insurers, you know, and it'll apply to everybody, even those with self-insured plans.